So firstly, regarding to the outlook of Vietnam, before that, we want to put Vietnam in the global context. We see that the global inflation is declining and economic growth is recovering. For the next 5-year period, GDP growth of the world is expected at 3.2% on average, and inflation at 3.6% on average, and declined significantly from the peak during the COVID-19 period between 2020 and 2024, 8.6% in 2022, down to 5.8% in this year for CPI. And because thanks to the lower inflation, so we have expected further boosting in economic growth in key countries in the world, together with the trend of easing monetary policy. Again, this context, so Vietnam is projected to remain the top performer in terms of growth in ASEAN, as well as among our key economic trading partner, as we can see from the two slides at the bottom for the projection of the year 2025 and for the year 2026. That said, Vietnam inflation is also higher than all of our key trading partner, showing that Vietnam has a limited monetary room compared to our trading partner. And unlike trading partner, they are using a lot of the fiscal support during the COVID-19 time, but Vietnam has plenty of room for further boosting in the fiscal spending in the next 5 years. So in our report that released 2 days ago, we project Vietnam GDP growth for the year 2025 at 6.7%. This is slightly lower than the National Assembly target between 6.5 and 7%, and achieving for 7.5%, and the Prime Minister target of 8%. But we think all three key drivers for growth Vietnam continue to be very resilient. Firstly, with stronger investment, especially for the public investment for next year, and continue momentum in double-digit growth in export and import activity, and quite strong growth in consumption. The outlook for 2026, however, is covered by the uncertainty surrounding the U.S. Trade policy, especially with the tariff promised by the President-elect Donald Trump, which could affect Vietnam export market, given its 30% dependence on U.S. market for the total export. And that means we expect in the year 2026, GDP growth for Vietnam to slow to 5.8%. That means we cut our growth target for 2026 by 70 basic points from our previous forecast, driven by a potential decline in actually not a potential growth, slower growth in FDI and decline in public investment.